Good morning, welcome to the learning session. I hope you're doing well. Okay, so today it's a final day of doing a live session on YouTube. Like I said, I'll do it when I feel like it, but I made a promise to myself to do it from April up to September, and that's what I've done. So going into the month of September, it'll be quite different. I'll come online when I feel like doing that. Okay, so without wasting too much time, let's see what the market has for us. We're gonna start with the dollar index. So with the dollar index, I have been looking for price to continue going up. Last Friday we actually caught the reversal down here, and then this week we anticipated a reversal here, and today we're looking for a reversal here, which you can see prices now going up, right? So I want to continue looking for the dollar index to go up. We might take out this high and then go for 109.77. all right, so that's my bias for the dollar index. Euro, I'm actually looking for euro to go the opposite direction, so we're looking for euro to drop. This morning I have this as my target. We can go lower than that, but based on the fact that euro pound is still going higher, I'm looking for this low as they draw on liquidity. And on the 15-minute chart, there is a trade that I'm anticipating. Right, so here it's just OTE. Right, yeah. So that's what I'm anticipating them to give me a sell to attack these equal lows in here. All right. So euro, I'm looking for lower prices. British pound, same thing. I actually missed out on a sell because it didn't get to where I was looking for them to trade to. Right, I was looking for at least this. Okay, that's what I was looking for, and you can see that wasn't the case, and price has rejected. So on the downside, if you measure this range, targeting wise, I'm looking for that. All right, so we do have 1.15789 as the downside objective. Now, because this did not get to OTE, that high can be inducement, that high can be engineering of liquidity, and price can come back up, take that, and then drop. So be aware of that. All right, if they decide not to continue and you see it coming back up, that's just the inducement or engineered liquidity, and then price will obviously take out the high and then drop again. So you can look for a sell if you do see that. So you can actually set up a trade alert, or you can set up alert here like that, and then if it triggers, you can come and see that they've taken out the high, and you can look for the sell to come back down. Okay. New Zealand, I'm looking for same thing, lower prices. Yesterday we had a sell idea that price couldn't get there for us to sell, right? It missed our entry. I think the entry was just on the H4. I was looking for this low right there for the entry, and it missed it by 2 pips, and the price dropped. So this morning I'm looking for a continuation to attack this low, right? So look for New Zealand to continue going lower. On the daily time frame, let's go on the 4. Alright, there's a nice low gap down there. That's where I'll target. Yeah, I'll look for price to go and attack that low into that, and then that's it. Okay, so look for a sell to continue going down. Now we do have a range in here, and inside that range we do have a gap up here, so you can use this as a dealing range and then sell in 618 and look for continuation to attack this low. All right, Aussie also had a level that I was anticipating, and it couldn't get there. Yesterday we got a sell up here, and the drawn liquidity or the target is on the H4. We're looking for price to drop into this gap here. You can see we still have a little bit of room to go. So this morning I was looking for price to return to OTE for continuation. Right, so I'm looking for price to return to OTE for continuation. Somewhere up there, and then reach there. Now once we get there, I'm not looking for continuation yet. I'll have to see what price will give me, because based on the higher time frame, that can offer a rejection. Maybe once we get here we might get some kind of a pullback to upset anyone that is short. Okay, so that's why I will not look for continuation to the downside, but close everything here, and then I'll see how price trades down there. If I see maybe a run on liquidity to the downside, then I will take a trade to continue going lower. So what I mean by is, because we have a dealing range in here, right, price can just get there and upset sellers. So for me to sell to continue going down, I have to see a run on stop once we get to that level. So I will have to see a run above a high and then a breakdown. Then I'll be interested in using that range to sell to continue on. If I don't see that, I'm not interested in selling down here. Okay, but on the other hand, if I do see a run on a low and price break structure, I'll buy that, because it's in discount. Okay, so I'll buy that. So it depends on what price we do. Once we get here, then I'll make a decision based on the price action that I will see. Right, so Aussie, we are looking for one more drop. Okay, even if we are going to go up, I like the fact that we have 1, 2, right? Generally you're gonna get one more, so 1, 2, 3 drives, and then maybe a push, right? It's like something like this: 1, 2, 3 drives, and then a push. Okay, so that's what I'm looking for. Gold, we've been looking to sell, and today there's a small little gap on the 1 hour time frame in here that I'm expecting some kind of a reaction. I'm not expecting it to go to the moon, okay? But I'm expecting maybe a small little bounce, and that can, you know, upset sellers in the market. So if you are short, make sure that, you know, at that level you take most of your profit off. It might bounce off, and I don't know how far it's gonna go. It depends. We have a gap here that it can bounce off into that. We also have all these highs here, and as crazy as gold is, it can just run up and then come back down again. So if you are selling, make sure that you've actually taken most of your profit off at that level, right? And then we see what we will get. If they trade through it better, comes back to it, we look for a sell. Okay, but you know, it's a gap, so you need to respect it. Crude oil, I'm upset with this pair because it's not giving me an entry. This morning I was actually looking for it to trade a little bit higher before going down, but you can see it's not doing that. My next draw on liquidity is down here. We could also go and attack this low, but for now, you know, I'm looking for there as my target. Yesterday I actually missed my entry right here, and the 15 minutes did not give me an entry. During our live session, we actually anticipated a drop from here, but I was doing a live session, so I couldn't participate in that. And so far you can see where it's got to. So now I'm looking for that as the next target. Okay, there is a huge void in there, so that's where I think they're gonna take price. Euro yen, I'm looking for higher prices. All the yen pairs, I'm looking for higher prices. The euro yen, I'm looking for price to go to 140. Okay, so 140 is my my draw on liquidity. It's the daily high over here, so look for buys only. In doing this session, sometimes I do miss some trades, but it's okay. Same thing applies to pound yen. I'm looking for higher prices. It will come when this pair decides to give us a rejection. We might probably see the high of the week form either today New York session or tomorrow New York session. So when it does that, that's when this pair will give us the buy. So watch this low here. Watch that low there. It might take out that low first before rejecting to go higher. So you can actually look for something like that, and then you can see they've engineered equal highs over here. Then you can go and attack those. Ultimately, I think it's gonna go somewhere here, right? But for now, just wait for this to give you the trade to go up. Like I said, this pair is really raging higher. That's why the pound is suffering and the euro is enjoying, right? It will flip at some point, but for now, just make sure you are with the euro yen to attack this high. Partial will be above here, and what will change that will be if price closes below this low. The key is close. Okay, so if we close below this low, then that's it. This level is no more valid. But as long as this low is intact, you're looking for price to attack this and that one. And then this bad boy, we were looking for a buy yesterday somewhere here to attack exactly that high, and we didn't get one. Same thing today. I was looking for that, we didn't get that. So I think we do have some kind of engineering going on, because price is not trading to any level in discount. It's just keying up from the equilibrium and moving higher. Now, one hint for you guys is that anytime you have a dealing range and price hits the equilibrium price point and then it goes up, take note of that low, because anytime price is coming back down, chances are that low is going to be swept before going up. And the same thing applies to if you do have a high that does not trade to any level above 50% and it trades to 50%, it might come back up, attack the high before going down. So when you have a pair and you're looking to sell or buy and it trades to 50%, make sure you are aware, because next time it's coming back, probably they will not respect that dealing range. So for example, if this is the range, right, and we already had this range and price did not trade to, let's say, a gap down here, but it reacted off from the 50%, when it's coming back down, there's a high probability that they might attack this low and then hit that before going up. If they don't, then still highlight that level, because in future, if the price is coming back down, right, so this is 50% and it comes back down and it respects this and it goes higher, that level right there will be a good level to anticipate a bounce in future. Why? Because that should have been a level that price should have traded to. My bad, not that high. But if, let's say, we have this kind of price action, this is where price will react and then go up and then come back down again. Right? So by having those levels on your chart, you'll be able to anticipate where retracements are going to happen. If you're looking for, say, price is trending up or down and you want to identify where retracements are going to happen, generally they are going to happen at those levels. Okay, let's show you an example. Say for example this high to this low, right? And then price will retrace to 50% and not trade to OTE. Next time came back up, right? That's going to be where price is going to react off from. So this high is going to be like I said, engineered, and then price will react and go down. But I also forgot to mention that if, let's say, you do have that and then price actually never retraces down here, okay, price never trades to the 50%, it just trades off from the breaker and then goes up, not even the 50%. Now that will give you a very good level to anticipate future price action forming there. Okay, and yesterday we actually caught reversals on Bitcoin using that. So this is an example. This is an example of such area, right? There was price action leaving some sort of unretraced, I'll call it, created my own word, unretraced level, right? So unretraced level, which means price did not retrace here, price goes up and then comes back down. That level is going to be where a bounce is going to take place, right? And that's what we got with this bounce here. Same thing with that bounce there. And yesterday we had the same thing with Ethereum, or quote unquote the bounce that happened here and the bounce that happened here are all a result of something like this. All right, so make sure that you do mark out all those levels. So for example, right now you will see that price only traded to this, right? So what about down here? That would be a level that, let's say, price will go, and then that's going to be a level to anticipate a bounce, breakthrough, bounce, continuation. All right, show you an example here, like this one here. This high to this low, pretty sure that's 50%, and then comes back up and then go down. Okay, same thing here. Price makes that impulse leg, it never retraces, so that area, right, becomes where price is gonna bounce. Same thing here, price breaks down, no retracement, and then it bounces back up into that area and down. So you can actually see that these levels are where price is reacting off from. If you pay attention to price, you will see where price is going to give you reaction off from are going to be these areas where price never retraced to, and then they will give you the reaction that you're looking for. So if you are in a trade and price is trending down, on your left side here, find these kind of areas to anticipate a bounce. Or if price is going up, on your left side, find these areas to anticipate a rejection to continue going up. So it gives you, if you do miss a trade, it gives you that opportunity to know that there's going to be a retracement for you to get into a trade. Okay, and I've used it several times. Sometimes, like for example, if you go to the oil trade, right, this is an example of a level that price never retraced to, right? And that can cause price to do what? Pull back and then continue. Note this, so depending on the trend, those areas are gonna act as where retracements are gonna form. Okay, and those areas are gonna act as where retracements are gonna form. So for now, you probably wouldn't see it because you're not aware of it. But let's say price makes a new high and it breaks down. If we don't retrace back above this low, okay, if we don't retrace back above that low, anything in here is still unmitigated, right? So if price goes down for years and it comes back up, you're only interested in that area. So and yesterday I was teaching in a Discord that if you were trading it live, okay, if you were trading it live, say price has just formed this and it retraces, you're gonna sell short, right? Because it's just giving you a new direction. So the fact that price does not trade back into it doesn't mean this area is not still valid. It's still valid. So if it goes down for years and still comes back up, that's still valid area for price to react off. I'm not saying it's going to cause price to go all the way back down to where it started coming from, but it's going to give you a reaction, and that reaction, depending on the time frame, is tradable. Or let's say price is coming back up and for some reason, right, and say it does something like this and it's coming back up. For some reason, you did not catch an entry, pulled back, you did not catch an entry, pulled back, did not catch an entry. And you can tell that the draw on liquidity is going to be up here. Well, that area that price did not mitigate is that area where price can cause a bigger pullback. And then when it does it, you can then anticipate a buy to go back up. So that can cause that retracement to continue price. Okay, so it's not a level that you can buy or sell, but it's gonna cause reaction that is tradable if you want to trade it. And like I said yesterday, that's what caused this bounce here. That's what caused this bounce here. And same thing applies to Bitcoin, right? You can see I was pointing to one down here because we had a breaking structure there and we had a gap. Price never retraced back to that. So that was a level that price was going to react off from. And this red area is the same thing. It's a bigger one where price left on the daily time frame and never pulled back to it, and that's what caused that. Okay, so that's something you want to pay attention to. And I was on this pair. That's what I was saying about. I was talking about this. So that area, you want to, unless price comes back down, then we buy to continue going up. If not, if it goes up, I'm still interested in that area. I'm still also interested in this area. Okay, so you can obviously look for price to give you some kind of a trade idea going forward inside those areas. Is this recorded? Yes, it's actually on YouTube. It's on YouTube, so once I finish the live session, it will be you'll be able to rewatch it. Okay. All right. Euro pound, like I said, we might get a high to form today or tomorrow. I think we've gone up too quick, and there needs to be a retracement. So either they form a high today or tomorrow. Now, the high that I'm looking for a run above previous day's high and a breaking structure. That's the high I'm looking for. So if that does not happen, price can continue going up. And since we are in premium relative to this range, I'm not interested in buying. It can go up, but I'm not interested. Okay, I want to wait. If it does give me a bigger retracement, this will be a good area to anticipate a buy, because we have what I just described here. Price took out this low and never retraced, so that area is a tradable area, right? And this is again a hint for you guys. The less run on stops that you have as price goes in a specific direction, the aggressive the movement going back in the same direction. So if price is going up and it does not do things like this, right, then it's just flat. So if it goes flat, the harder it drops. So anytime you see price dropping aggressively somewhere, all that means is that there was less run on stops, so price would just drop. And a typical example will be this one here. Notice how price dropped down, okay, because inside this move there was no run on stop, right? The only level that there was run on stop was down here, hence reaction. So the less you have run on stops, the aggressive the move is going to be. The more run on stops that exist as price goes up, the less aggressive price is going to be, because there's going to be lots of pullbacks. So if you're looking for pairs to trade, I know there are pairs like Swiss, right? The Swiss pairs, if you've paid any attention to the Swiss pairs, they hardly drop aggressively or rally, because there's always kind of rates going on somewhere. Hence, price is not going to trade smoothly. When I say smoothly, price is not going to go like this, aggressive drop, aggressive run, unless there has been mitigations, right? Say price does something like this, and then this area is mitigated, right? Then if it's coming back down, we know that that area is mitigated. It gives you what equal low or low resistance liquidity run, so it's going to run aggressively. So I'll actually bring out a Swiss pair so you can see what I'm talking about. AUDCHF. So things like this. I should move that. Notice how price does not run smoothly to one side, because there's always some kind of a run on stops on this pair somewhere. So because of that, it's gonna make it hard for price to trend. So it's always mitigation going on somewhere. So for example, this to that, that's a braid. So price is not gonna come down here yet, it's gonna react. And then you also have this and this break. Price is gonna come back up, it's not gonna go up here, so it's gonna react. So there's always some kind of random stops on the Swiss pairs, hence it causes price not to trend properly. Okay, but it's good because if you understand it, it's actually great because price is not gonna rally aggressively somewhere, so you're always not gonna get these wild crazy moves against you, but rather you'll be able to pick these levels, right? If you understand what I'm trying to communicate right now, you'll be able to pick up these kind of sales, this kind of buys, like this kind of sell, this kind of buy, right? You'll be able to pick them up because the price is just, it's like they are laying these I would say nuggets. They're laying off these easy kind of trade ideas on the pair. Okay, and you can see I did have OT here, because if you look closely, right, so price is not going to trade down here. Okay, it's just pulling back and then find support here to go back up. So you just need to understand, you know, how to frame these random stops, and then you can trade them. All right, so there you go. It looks like they're forming what I'm looking for. It hasn't taken out the low yet, so this is, let me see which screen I'm on. Actually, let's go back to the other screen. That's our Discord screen. Let's bring in sessions. Let's bring in sessions. Here we go. And highlight previous day's high. So they've taken previous day's high. Now I need a break below this low, and if they do take that low, if they break it, my draw on liquidity is going to be where I just taught you, right? We had a run on stops here, and then price went up. Prior to that, or before price gets there, do you see anything like that? No, apart from here. So the idea will be price run this low and went up. So where is potential liquidity going to be? Here and here. So if we break this low and it pulls back and you sell, that's going to be your target. All right, so let's see if they will break that, and you will look for a sell. Okay, let's go and look at the euro. Missed it by a pip. Okay, no problem, you still get an entry anyway. Let's see if gold reacted from that level. Okay, it did not. That's good. That's what I want to see, because we are looking for lower prices. So the if it does not react, it's even better, because then it shows intent that they want to continue going lower. So now we are going to expect price to take out this low, but once that low is taken, now we are in a region where there is going to be a bounce in here. Either they're bouncing off from here, or I think I actually mapped out the levels. Okay, I think in my exercising I've deleted it, and then somewhere down here right? Now, it doesn't mean you're going to buy to go to the moon, okay? It's just going to give you a bounce, and those bounce will serve those that missed the sell to find an entry. So as it's bouncing, all you have to do is, okay, price is bouncing off from this level, how do I get in, right? So then you can map out your dealing range if you can find one, and then anticipate price trading to premium. So as it's dropping and it hits that, what you need to do is identify your dealing range or the swing that moved price down, and then now anticipate it to come into premium, and then you sell short because price is dropping, right? But the more advanced trader, right, like those in the Discord are going to be, this can give you a bounce, and that bounce is tradable, right? You just have to see what you need to see, and then you trade it to the upside, and when it gets into premium, you trade it back down again. All right. Okay. Let's go to Ethereum and show you what I'm anticipating. Yesterday we had price drop into discount. I was actually looking for this gap. Right here. $79 retracement level. The reason why I was looking for that is because, let me explain. Price trades up and then trades down. Okay, so here we do have a break. So on the 1 hour, this is going to be like a downtrend. Okay, so for price to go up, it needs to change direction on the 1 hour again. So as it's dropping, I wanted to see this and then up, but that didn't happen, and they broke up here. So what we were looking for is a retracement to OTE, and it went to 50%. For some reason, some weird reason, it's reacting off from 50% and not the 618. So those 618 levels, as I've just mentioned, are going to be tradable levels in future. Okay, again, they've just retraced back down this low to the high, left that area, and they've gone up. So again, tradable area if price comes back down again, right? And we are looking for, yesterday I gave 2 levels that price should reach for, this one and that one, and maybe, I'm not saying it's going to do that, but maybe, and that one. Okay, so we are looking for higher prices for now, for the time being. Now if you go onto the daily time frame, this is a big drop, so this is just a retracement. So that's what I'm saying, maybe not high, but honestly speaking, inside this candle, this wick here, if they trade above it, that's something. So this would be it if I was buying, or if I trade Ethereum. That's it for me. Once price hits this low, that's it. I'm no more interested in buying. Even this level, that level right there, that would be it, because you are trading against the tide, or you're going against the main direction. So this is just a pullback, and it's pulling back from what I've just taught you today, a level that price should have retraced to, Okay, this is on a daily big time frame. So they take out stops, run up, price never retrace back down beyond 50%. Okay, that's 50%. So the first bounce that happened here, tradable. The second bounce happened down here, tradable. All right, so that's that on Ethereum. Bitcoin, I'm looking for it to trade into premium, so Bitcoin can trade up to 50% of that range. It can also trade into the gap up here. So I think this one can offer a trade idea. I like the fact that we have closed in this aka void, aka gap, aka imbalance. I don't trade cryptos, but I have so many markings on them. So prices coming off from this, right? So we should see it trade up to attack these highs to 50% and then that level, and that'll be it, because we are going against the trend and price can resume going lower. Okay. And then finally I'll look at the Nasdaq. I did do some markings on the chart. I've not looked at what it's doing now since I did the markings, so we are going to see it together. Let's go over here and let me check this pair. Okay, it's doing it. Notice the gap that is leaving, or the void, right? That's nice. We want that to stay and then close below this low, then look for price to trade to those levels that I pointed out. Before I do that, let me check Guardian. Okay, it's still hanging around. Let's look at NQ1. There we go. So yesterday I did these markings for our group to anticipate price coming into premium and then going down again, and they've actually gone into premium. Let me see if they did touch 618, because if they did, that would have been nice. Okay, that did not touch, and that did not touch the 618. So
there's some biscuit. There's some biscuit.
Dude.
Thank you, Daddy.
You're welcome. Sorry guys, that's my little boy. He'll be going to school tomorrow. I'm so happy. I've endured for the almost a month. Is it more than a month now? And I'm glad he'll be going back to school tomorrow. Anyway, yeah, we were looking for either 618 because that will give us premium, and then we look for continuation, or there was a H1 fair value gap and that price will react from, continue going down. I'm not ruling out that it cannot come up here. It still can, because this likes moving in New York session, so maybe New York can send it up and then down. So have this on your chart, okay, and then you can look for lower prices. In terms of targeting, again, look where price is bouncing off from, right? If you look closely, you will see it as a random stop break structure. Price never retraces, so in here there's a gap, down here is a gap, and price reacts from both of them. Okay, it reacts from that one and gives you a nice bounce inside this range. If there's any gap that exists, you're not pay attention to it. Not my drawings are not great, but bounce, bounce. Very there are levels that you can actually what's the word? You can predetermine it. That price is gonna give you a bounce. You're not going to trade it. You don't have to trade it. You just have to be aware that it's going to be there. Now, if you are selling, those are going to be where you scale out. All right. Let's go to EQ. I did only two, NQ and EQ. Is it EQ? Nope. I forgot a symbol. Let me check it. ES, my bad. ES1. Same thing. You can see I still have the tolerance there. That actually traded to 50% and it's rejecting. So we're going to look for continuation to the downside. Still have that. I like this level. Okay, that down candle there. These are one of the these levels are one of the things that I started seeing when I was, praying for some ways to get into a trade when I miss a trade. So if price is going down and I miss the trade, how do I get in? This is what I saw, right? If price goes up and it breaks down aggressively, it's the mitigation, right? Price comes back into here, especially I was using a trick. I don't use it anymore. It's still valid. I'll teach it so you can, if you want to use it. What you want to do is actually turn your candles off and make it a line chart. Okay, and then in a line chart, mark out these mark out the V shape. Okay, so if you mark out the V shape like this and that one, and then turn back your chart on, and you'll be shocked how those levels actually give you some reaction. Okay, if you turn your chart into this, map out your V shapes like this, like that. Okay, and this. You don't pay anything, it's for free, right? And you see how price reacts from this level, that level, that level, and then obviously that level. Okay, and then if price is going up, you do the opposite. So if price is going up, turn it off, map out all your V highs, all your V highs, right? And then turn the chart on, and then you see how price react at those levels. Okay, that's free bonus for you guys. And I actually learned that I was aware of the rally drop and then those levels, but I wasn't aware of the turning off the candles into line, and someone showed it to me. can't remember where, but someone did show it to me that if you turn the line chart on, and if price is dropping or rallying and you're not getting an entry, turn the lines on, map out your V levels, and then wait for price to retrace to them, and you get sniper entries basically. Sometimes the candles will not breach it. Sorry, the wicks will breach it, but the bodies will not breach the level. So you might get the wick to go all the way up, but the body itself will not breach that. And ICT teaches that in its concept. So if you want to learn more, I'm not sure which lesson ICT gave, but there is ICT teaches about price reacting off these kind of levels without actually breaking them, but the width can go through them, but the body itself should stay below. All right. Okay, let's go over here. Let's check out a few things that are happening. I'm actually short on the euro since yesterday, so I do have position on already. I know during this session I do miss trades like this, but it's okay. I already have a position on. If I didn't, you guys will be paying me. I'm joking. Let's go to ZD CAD. Okay, let's look at that from a higher time frame perspective. I'm just, I'm looking at this and that. Okay, they took out this low here and went up. So technically price should go up, and it did. And it went into premium, and it's coming back down. So by default, because the higher time frame is looking for lower prices, we should be dropping. But because they took out stops here, remember what I said, price is not going to go down in a straight line, so it's going to react. So we drop down to the weekly, and then we identify these levels. So we have this, right? So if you were trading it live, this is going to be an area that you will respect. Yes, it did react off here, but below this low it's also liquidity, hence it's reacting, but it's just reacting in a retracement. Let's say it's retracing, it's not reacting to go up, right? It's retracing. So now the question is, where is it going to retrace to? Okay, where is it going to retrace to? Now I know specifically you asking that question, so I'll give you more insight in the Discord. But looking at how it's trading now, we might get price to maybe attack previous week high before coming back down again. because it's reacting off from a high time frame level, right? So then if we drop down to the daily, we start looking into, let me go back to the weekly first, because they've attacked previous week low. So they've attacked previous week low here, and then price is rejecting. This is previous week high. Remember what I shared some time ago, that anytime price takes out or we start a new week and inside the previous week's range there is no imbalance and you see price closing higher, it's an early telltale sign that that weekly high is in trouble. Okay, if price closes for the week, that's the end of that week, 1 2 3 1 2 3 4 5, and there's no imbalance on the daily time frame, and then we start the new week and price starts closing, you don't trade on Monday anyway, price starts closing higher. For example, yesterday price closed bullish, right? That is a telltale sign that price might take out this high. So we don't know it's going to do it, but that's what you go with, right? That's the it gives you this idea to work with. Then you trade OTEs to the upside, targeting this high, right? So if I play it, and that's what it's currently doing. So if I drop down to the H4, I will look for price to probably attack this high here, and then once that high has been attacked, I will stop. So you can actually buy to go up there, and then you stop, and then you wait to see based on day of the week. So tomorrow will be Thursday, and we also have Friday NFP. You can get here, run that breakdown, and then there you go. That's your trade for the continuation to the downside, right? So looking at it now, even if it does retrace, buy it, because there's no gap on the daily. So it's gonna come to you by now. You should have a little bit of experience. If you don't, just trust that you buy OTE, leave your stop loss there, and then target that high. And then once you get here, wait, see if it's gonna run that high, break down, and then you look for the sell. There's nothing wrong taking a loss, right? When you take a loss, it actually gives you more information. So if you take a buy, and let's say it does something like this, what is it so telling you? That price is just gonna continue going down. Wait for pullback and then you sell, because it's supposed to be going down. Is that okay? Let me go and check. There we go. Nice. So now OTE is the deal. Back down again. Is it 10 o'clock? Let's look at the 10 o'clock candle. Perfect. Looks nice. Any other questions? Okay, so I'm just gonna say this, right? I have created a Discord that I'm going to, because I don't know if you guys know, but I am no longer with Forex Lens. I've not actually announced it online yet, but you know, I'm just saying it. I'm no longer with Forex Lens, and since what I do, my passion is to help, right? I've created my personal Discord, and that's where I'm going to be going forward. In case you're wondering if you're not doing YouTube, what you're gonna do, I've created a personal Discord that I have, and I'm looking for just few people to be in there. The original Discord had about almost 170 people, but I've got rid of everyone, and I've only kept, or not kept, I was looking for only 30 people that will want to be there. And it's not free, in case you're wondering, it's not free, but I'm not forcing anyone to join, right? I'm doing it because there are personal requests from people that wants me to do one-on-one, and I am not in the position to do one-on-ones anymore. So that's why I've created that group, so that I can help those individuals that are requesting for one-on-one, but in a group format, right? And I don't want 1,000 people in there, I want few. The number that I wanted is 30. At the moment there is 14 people, so I still have 16 people to go, or 16 people to allow in. After that, that's it. I'll not allow people in anymore, because it's a I would say it's hard work, but I want a small community of traders that want to learn and develop, not just in trading, but also mindset wise, personal personal development. So that's why I'm making it just 30. And you know, I've given them the opportunity to request for one-on-ones. Within a month, I can look after 30 people if they're going to request for the one-on-ones. So in case you want to join, just reach out to me on Telegram. I will send you a link, and then you can join it. But like I said, it's not free. I will send you a video that you can watch, and if you like what you're going to get, then and then only accept that you want to join. If you don't want to accept what you're gonna get, feel free, do whatever you want. Okay, so from Friday, I will not have a live session on YouTube, right? So just know this is our final one on YouTube. The next one, it will be if I feel like it. I know that sounds a little bit weird, but if I feel like doing the YouTube, which, you know, I love doing this, to be honest, my passion is just to help, right? So you never know, I probably will do it every day, but we will see. Okay, so if you have any question, feel free to reach out to me on the Telegram below the description. If not, take care, and I'll see you in the next YouTube session. All right, so have a great day, enjoy your week, and thank you all for being with me throughout this journey from April, right? And take care.